Imagine a day in the not-so-distant future. A day when the silver market doesn't just nudge upward, it explodes. What would that look like? What would it feel like? Today we're going to walk through a fascinating thought experiment based on source analysis that paints a picture of that very day, a day that could signal a seismic shift in the financial world. This is the Bullion Signal Podcast, the channel where we look at the big picture for precious metals and help you protect your wealth. If you find this kind of analysis valuable, make sure you're subscribed so you don't miss what's coming next.
So, let's set the scene. The date is December 9th, 2025, and this is the number that traders see flash across their screens. $61.44, an intraday high that shatters years of expectations. Now, according to the source material we're looking at, this isn't just a new price point, it's a detonation. It's the moment years of suppressed energy is finally unleashed. And this quote right here really gets to the heart of it. This move isn't seen as just another day of market volatility. It's a message. It's the physical market finally shouting over the noise of the paper market, making a statement that can't be ignored any longer.
Okay, so let's start by breaking down the anatomy of this hypothetical day. Part 1 is all about that initial shockwave. We're going to look at the numbers that, according to this analysis, defined this historic event. Here are the raw stats. The date we've mentioned is December 9th, 2025. The high hit 61.44. That's a 5% surge in a single trading day, which is just massive for a commodity this important. But the real story here, the one that changes the game, is the breaking of that $50 psychological barrier. For years, $50 has been this major wall of resistance. Smashing through it isn't just a technical event, it's a psychological one that opens the floodgates for a whole new wave of buying. Right, so an explosion like this never, ever happens in a vacuum. It's the result of pressure building up over a long time. So now we're going to get into the backstory. The decades-long war, really, between two opposing forces in the silver market that set the stage for this breakout. And this slide really lays out the two sides of that conflict. On one side, you have what's called the paper market. Futures contracts, huge short positions, and a narrative that silver is just poor man's gold. This is the side that, according to many, has been used to keep the price artificially low. But on the other side, you have physical reality. And reality is a stubborn thing. You've got relentless industrial demand, a massive and growing supply deficit, and inventories in vaults at critically low levels. At the end of the day, you can't print a physical ounce of silver, and that reality was always going to win. So, if the market was already an inferno of fundamental pressures, what was the final catalyst? What was the spark that ignited the explosion? According to the source analysis, it was the Federal Reserve signaling that they were considering rate cuts. The prospect of cheaper money, of more currency printing, was like pouring gasoline on the fire. It took all that underlying physical tension and just supercharged it. Now, as you can imagine, a move this big sends shockwaves through the financial community. Everybody has an opinion. So let's take a look at how the various experts and analysts cited in the source material reacted. What you'll see is a powerful consensus forming. Analyst Gary Savage immediately called it what he saw, a massive short squeeze. Now, what does that mean in simple terms? Well, for years, large institutions have placed huge bets that the price of silver would go down or stay flat. When the price explodes upwards instead, they are trapped. They start losing billions, and to stop the bleeding, they are forced to buy silver on the open market. And that buying, ironically, just throws more fuel on the fire, pushing the price even higher. It's a vicious feedback loop. And to put this move into perspective, look at this. In this scenario, gold is having a fantastic year, up 40%. But silver, it's up 100%. This perfectly illustrates the incredible leverage silver has. When precious metals finally get moving, silver doesn't just walk, it sprints. It often outperforms gold by a factor of 2 or 3 to 1 in a bull market. This is a really profound point attributed to analysis from Peter Schiff. The narrative for years has been that cryptocurrencies like Bitcoin are the modern safe haven, while silver is just an old-world industrial metal. But in this scenario, over a 4-year period, silver has outperformed Bitcoin by 50%. It completely flips the script on what's considered a safe asset versus what's just pure speculation.
Now, for those of us who watch this market closely, this number is a huge deal. The gold to silver ratio is simple. It's how many ounces of silver it takes to buy 1 ounce of gold. When that number is falling hard, it means silver is gaining strength against gold. A ratio plummeting down to 69, as noted by the Happy Hawaiian, is a screaming signal that silver isn't just following its big brother anymore, it's leading the entire precious metal sector.
And here's where the narrative really solidifies. It's no longer just the dedicated silver bugs talking about this. The mainstream media and financial institutions are forced to acknowledge reality. Bloomberg starts reporting that Fed easing is a major driver. Reuters confirms the severe supply shortage. Exchange-traded funds are draining physical ounces from the market at an alarming rate. And even a major bank like TD Securities is reportedly admitting that $60 silver isn't even high enough to encourage new mines to open. The demand is just that overwhelming.
So, after shattering $60, the big question on everyone's mind is, what's next? Where do we go from here? This final part explores the future price targets that the analysts in our source material are laying out. First, you have to appreciate the speed of this move. The jump from $50 to over $60 took just 12 trading days. The implication is pretty clear, right? As this momentum builds, the next $10 move could happen even faster. The train is leaving the station, and it's picking up speed. Technical analysts like Rashad Hajiv and Jesse Colombo, cited in the source, see a very clear path forward on the charts. First, the momentum propels the price to an initial target of around $63. From there, they see a classic bullish chart pattern forming that points to $72 as the next major stop. And once we're past that, the path starts to look really clear towards $80, $90, and even $100. And that brings us to the ultimate prediction from analyst Mark Toburn. He sees a clear path to triple-digit silver, over $100 an ounce within the next 12 months. His logic is simple. The old system of paper price manipulation is broken. It's collapsed, and without that artificial ceiling holding it down, there's very little resistance to stop silver from seeking its true value. To give this some historical context, the SRS Rocker Report brings up a fascinating parallel. Back in 1980, during the last great commodities boom, 1 ounce of silver could buy you 1 barrel of oil. Simple as that. Well, if that same relationship were to hold true today, it would imply a silver price of $93. The point is, even after a massive run to $60 or $70, you could still make a strong case that silver is historically undervalued compared to other real assets. So as we wrap this up, the big takeaway from all this analysis is that an event like this would be about so much more than just a price on a chart. It would represent a fundamental, deep psychological shift in the market. A moment where investors all around the world stop trusting paper promises and start demanding real, tangible assets. It's a revaluation of what money truly is. And that leaves us with this final, provocative question. Is a shockwave like this the beginning of the end for the paper-dominated financial system? Could this be the start of a new era for real assets like gold and silver? That's the thought we're left with. I want to thank you for joining me on the Bullion Signal Podcast. If you got value from this breakdown, please hit that like button and share it with someone who needs to hear it. And of course, make sure you're subscribed for more deep dives into the world of precious metals. Now, a quick disclaimer. This podcast is for informational and educational purposes only. It is not financial or investment advice. You should always do your own research and consult with a professional before making any investment decisions. Stay safe and stay prepared.